Hey everyone, welcome back to the channel. Today, we're diving into the top 10 reasons why Bitcoin is set to absolutely explode in the future. We're talking about the kind of growth that could turn a small investment into life-changing wealth. So, if you're looking to understand what's driving the hype around Bitcoin, you're in the right place. If you're new here, don't forget to hit that subscribe button and give this video a thumbs up. It really helps out the channel and helps more people see this awesome content. Alright, let's talk about institutional investment. Think of the biggest financial institutions in the world, hedge funds, banks, even publicly traded companies, and they are starting to put serious money into Bitcoin. Companies like MicroStrategy and Tesla have added Bitcoin to their balance sheets, and these are not small investments. We're talking hundreds of millions, even billions of dollars. This brings a level of legitimacy and validation to Bitcoin. These companies have teams of analysts assessing risk and potential for profit. They're in it for the long haul, which is a bullish sign for Bitcoin's future. Let's talk about scarcity for a second. Unlike traditional currencies, which can be printed endlessly by governments, Bitcoin has a fixed supply. Only 21 million Bitcoins will ever exist. Ever. That's it. And right now, around 19 million are already in circulation, so we're talking about a truly limited asset. Now think about it in terms of basic economics. When you have a limited supply of something and demand increases, the price goes up, right? It's the same principle with Bitcoin. As more people and institutions want to get their hands on Bitcoin and the supply remains capped, the price inevitably has to rise. This scarcity is one of the key factors that makes Bitcoin so attractive to investors. It's like digital gold. Gold has maintained its value for centuries because it's scarce and difficult to mine. Bitcoin shares those same characteristics, but in a digital, easily transferable form. Remember when Bitcoin was this obscure technology that only a handful of tech enthusiasts were using? Those days are long gone. Today, we're seeing a massive increase in the number of businesses accepting Bitcoin. You can now buy everything from a cup of coffee at Starbucks to a Tesla Model S with Bitcoin. This is huge for mainstream adoption. The more practical use cases there are for Bitcoin, the more people will want to use it. The technology behind Bitcoin, blockchain technology, is constantly evolving and improving. We're seeing advancements in scalability, security, and efficiency that are making Bitcoin even more attractive as a long-term investment. For example, the Lightning Network is a second-layer solution that's being built on top of the Bitcoin blockchain to make transactions faster and cheaper. This is crucial for Bitcoin's mainstream adoption, as it addresses one of the key criticisms of Bitcoin, which is its transaction speed. We're also seeing the development of new privacy-enhancing technologies that are making Bitcoin transactions even more secure and anonymous. This is important for people who value their privacy and want to keep their financial transactions discreet. And then there's the whole area of decentralized finance, or DeFi, which is built on top of blockchain technology. DeFi aims to create a more open and accessible financial system, and Bitcoin is playing a key role in this movement. Let's be real for a second. Inflation is a real concern. The value of our hard-earned money is constantly being eroded by rising prices. This is where Bitcoin comes in. Many investors view Bitcoin as a hedge against inflation. Why? Because of its limited supply. Unlike fiat currencies, which can be printed endlessly by governments, devaluing the currency in the process, Bitcoin has a fixed supply. It's like a digital version of gold, which has historically held its value during periods of high inflation. When you think about it, when governments print more money, it decreases the value of the money that's already in circulation. This is what leads to inflation. Bitcoin, on the other hand, is immune to this kind of manipulation. Its supply is predetermined and can't be influenced by governments or central banks. This makes Bitcoin particularly attractive during times of economic uncertainty. When traditional markets are volatile, Bitcoin can offer a safe haven for investors looking to protect their wealth. Remember when governments didn't even know what Bitcoin was? Now they're scrambling to figure out how to regulate it. But here's the interesting thing. Regulation, while it can seem scary at first, is actually a good thing for Bitcoin in the long run. Think about it. Clear regulations provide much-needed legitimacy to the cryptocurrency industry. It creates a more stable and transparent environment for businesses and investors, which can lead to increased investment and adoption. We're already seeing this happen in some parts of the world. Countries like El Salvador have adopted Bitcoin as legal tender, while others are establishing clear regulatory frameworks for cryptocurrencies. This growing acceptance by governments is only going to make Bitcoin more attractive to mainstream investors. And as more institutional investors enter the market, they're going to demand regulatory clarity. They want to know the rules of the game before they put billions of dollars on the line. So, in a way, institutional investment is driving the push for regulation, which in turn will make Bitcoin even more attractive to other institutional investors. It's a positive feedback loop. Remember when Bitcoin was this niche technology that nobody understood? Well, those days are over. Today, Bitcoin is everywhere. You see it in the news, you hear about it from your friends, even your grandma might be asking you about it. This increased public awareness is crucial for driving mainstream adoption. The more people understand Bitcoin, the more likely they are to invest in it. And we're not just talking about tech-savvy millennials here. People of all ages and backgrounds are starting to realize the potential of Bitcoin. Think about it, when you hear about Bitcoin on a regular basis, it starts to feel more familiar, less risky. You're more likely to consider investing in it because it's no longer this abstract, complicated thing. It's becoming a household name. And this increased public awareness is only going to continue to grow as more businesses accept Bitcoin, as more governments regulate it, and as more institutional investors pour money into it. It's a self-fulfilling prophecy. Let's face it, the world can be a pretty unpredictable place. We've got economic instability, political turmoil, you name it. And during times of uncertainty, people tend to flock to safe haven assets. Things that hold their value when everything else seems to be falling apart. Historically, gold has been the go-to safe haven asset, but in the digital age, Bitcoin is emerging as a new kind of safe haven. Why? Because it's decentralized, it's not controlled by any government or financial institution. It's a global currency that's not subject to the whims of any single country. So when we see things like recessions, hyperinflation, or political instability, Bitcoin tends to benefit. Investors see it as a way to protect their wealth from the chaos. And as the world becomes increasingly interconnected, the need for a global, decentralized currency like Bitcoin is only going to grow. One of the most appealing aspects of Bitcoin is its decentralized nature. It's not controlled by any government, central bank, or financial institution. It's a truly global currency that operates on a decentralized network of computers. This decentralization is appealing for a number of reasons. First, it means that Bitcoin is resistant to censorship. No single entity can control the Bitcoin network or prevent transactions from taking place. This is in stark contrast to traditional financial systems where governments and banks can freeze accounts or restrict transactions. Second, decentralization makes Bitcoin more secure. The Bitcoin network is distributed across thousands of computers around the world, making it incredibly difficult for hackers to compromise. Compare this to traditional financial institutions, which are often targeted by hackers. And finally, decentralization aligns with the growing movement towards individual empowerment and control over one's finances. People are tired of banks and governments controlling their money. They want a more transparent, accessible, and equitable financial system. And Bitcoin offers a glimpse of what that future could look like. It's impossible to predict the future with 100% certainty, but one thing is clear. The Bitcoin ecosystem is still in its early stages of development. We're going to see incredible innovation in the years to come, which could potentially drive the price of Bitcoin even higher. Think about the potential for Bitcoin in areas like supply chain management, digital identity, and voting systems. Blockchain technology, the technology that underpins Bitcoin, can revolutionize countless industries. And as these use cases become more widespread, the demand for Bitcoin is only going to increase. We're also likely to see further integration of Bitcoin into our everyday lives. Imagine a future where you can seamlessly pay for your groceries, your rent, even your taxes with Bitcoin. As the infrastructure for Bitcoin and other cryptocurrencies matures, this vision will become a reality. And as more developers, entrepreneurs, and investors enter the Bitcoin space, we can expect to see even more creative and innovative applications of this revolutionary technology. Thanks for watching. If you found this video helpful, make sure to like, comment, and subscribe for more content like this. I'm really curious to hear from you guys. What do you think will be the biggest driver for Bitcoin's growth in the future? Leave your thoughts in the comments below. Is it the increasing institutional adoption, the limited supply, or maybe the growing acceptance as a payment method? Or perhaps you think it's something else entirely? Let me know in the comments. As always, thanks for watching, and I'll see you in the next video.